Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at a few assets. We're going to be looking at the SPY, the IWM, which is the Russell 2000 ETF, and US oil. Now this is the beginning of a new format where I'm going to be putting out 3 videos a week, but we're going to be covering more assets in each one. I've noticed recently that some of the longer videos I've put out are still drawing in the views, and to be absolutely honest, I prioritise taking as long as I need to cover what I want to cover and say what I want to say than I do chasing views. But if we can get a compromise between those two interests, then that's good enough for me. So that's what I'm going to do from now on, looking to put out 3 videos a week, likely Monday, Wednesday, Friday, if not Tuesday, Wednesday, Friday, depending on how busy I am on the Sunday. So that's the idea going forward. I'm sorry I missed you guys last week here on YouTube, where I didn't get any videos out, but I had a complete nightmare with my internet service provider where I didn't have any internet at all for the first part of the week. I was having to tether my phone through my computer to get some work done. I had to prioritise my patrons during the end of the week, as after all they do pay me for a living, so they come first. So we're now back here on YouTube getting an update underway. And I've explained to my patrons in a recent video some of the things that are going on in my life at the moment, which have tightened up my schedule somewhat. So one of the changes I've made to the Patreon, in case you're interested in joining, is I've cancelled the deep dive videos that were happening on a monthly basis, and I've replaced them with what is now going to be a weekly live analysis session via the audio channel on the Discord using a screen share. So people can contribute and we can have a Q&A session and you can watch me work live, and I'm hoping that will replace the deep dive education aspect from the other videos, which will still be available on the Patreon to anyone who signs up going forward. If you are interested, then please wait until either late on the 1st of December so that you don't get caught in the previous month's time zone anywhere in the world and therefore get double charged, or maybe even just consider doing it on the 2nd just to avoid that. If that were to happen, I would of course refund you, but I always encourage people to sign up at the start of the month, not near the end of the month, because you will get charged the day you sign up, and then you will get charged at the 1st of each month thereafter. Okay, so if you sign up late in the month, you're going to get hit by 2 charges, one on the day you sign up and then one on the 1st of the month. So I do put it on my Patreon channel nice and clearly. I put it at the in the descriptions of my YouTube videos, and I mention it here in the YouTube video. So I really am doing the best I can to try and make sure people don't fall victim to that situation. So please pay attention. Now anyway, enough of that. Let's now get on with today's video. So like I said, we're going to be looking at the SPY, the IWM and US oil today. So without further ado, let's get underway, and we're going to start here with the SPY on the day time frame in arithmetic scale. Okay then, so this is my preferred count currently for the SPY. Now we have 5 waves up into a primary 1, primary 2, intermediate 1, intermediate 2, minor 1, minor 2, minute 1, minute 2, minuet 1, minuet 2, and then 3, 4, 5 ending diagonal, minute 5, minor 3, ABC minor 4, and now pushing up into the minor 5, perhaps of an intermediate 3 for a bigger correction before once again heading higher. So this has just been an incredibly strong market, continues to do so, continues to be so. There's no reason to suspect it's over until it's over, and that's that at the end of the day. So using our channel, we can see here that every time we come up since our initial pivot, we work our way up to the top of the channel, hit it here, hit it here, hit it here, hit it here, and then we correct. We work our way up to the top of the channel, hit it here, and then we correct. We work our way up to the top of the channel, hit it here, and then we correct. Okay, so this is just an ongoing theme. I don't see any reason why it's going to stop. But the only time I would become concerned, if it did, would be if all this structure breaks. If all this structure breaks, then you are looking at something much more serious and a much larger wave degree completion up here. So it hasn't happened yet. Let's bring up our momentum indicators. I'm going to start including the basic analysis alongside the Elliott wave analysis more frequently here, so we can see the two married together. So we had in our latest price action, which we can come in and have a closer look at in a minute, we have either a 3-wave swing, so an A into a B wave and then down into a C here perhaps. And therefore we had divergence between what would have been the start of the A and the completion of the B in the MACD and the RSI, or it could be the divergence between the third wave and the fifth wave, as I've got it here. Higher highs in price, lower highs in RSI, lower highs in MACD, getting that pre-warning that price was weakening and about to break down. I think going forward, if you see this play out again and again and again as we work our way through the wave degrees to come over the next few years or next year or longer, who knows how long it's going to be. Every time we approach this trend, look for weakening price data and you're going to get a sell-off. And that's it. And then look for the signs of the reversal and buy it, because it just seems to be the thing we should all be doing. So that's a fib channel there, which shows or Elliott wave channel here, which shows how every time we approach the top of this thing we meet resistance. Now we can also look at our primary wave pitchfork here. Let's bring that up. You can see how this has successfully and happily contained all price data since that initial pivot of the 1-2 here. We've had one occasion where we've come outside of the outer bound. We've had a perfect test of the outer bound, and we've had a test of a median line up, test of the median line break down here to the 38.2. So we've been moving perfectly within inside this pitchfork. So once again, another piece of geometry that if this were to break, take out this low, that would be a sign of something big happening, something bigger occurring, something we have to be on guard against, and that could be happening now. It's always a possibility that the trend will end, but we don't assume it until we see it. Okay, so and then finally we can also look at a which one's this one? Right, we can also look at a regression channel. Excuse me. Take off our pitchforks for the moment. Now all this displays here is we take the low and we stretch it to the high and then project it forward, and what this shows us is a median line, which is the median value, the median value of the distribution. In this case the distribution is prices of an asset, the SPY, and this shows two standard deviations of the mean. So we know that one standard deviation of the mean is 68%, two standard deviations of the mean is 95%, three standard deviations of the mean is 98.7%, something like that. We'll say 98. 99% of the results will fall within three standard deviations of the mean. So in this case we've had a few examples of extreme results, but they're pretty rare. The vast majority of results, 95% of which, will fall within two standard deviations of the mean, and that's why the vast majority of price data occurs around the mean, because this is one standard deviation. If you had another line inside of here, you'd have 68% of all your results fall within one standard deviation of that mean. So that's why these channels work. That's why they contain price data, because that's just the way the world works. So there you go. This is still intact. We've had a bit of a hiccup here which looked like it could be trouble, but you know, we've stayed within the extreme of the what would be the third standard deviation, which would be another move away from here containing 98% of all results, and we've moved back up to the median line again. Now if this were to break down violently and go beyond where we would expect to see even the most extreme of results, then we can look to our other market structure, other forms of geometry, to suggest that the market has peaked in a more substantial wave degree, which we do have account for, which we can look at before we move on to look at the other assets, and therefore we would then be in for a severe correction. Anywhere between, well, I say severe, it could be 23%, which is a Fibonacci retracement, which would technically be a bear market. It could be 61%, a golden ratio hit under 61.8. Who knows? Can't see it until we see it. So they're the things we're looking for. We've got divergence, so we want to see if this divergence continues to, now that it's playing out, if this price breaks down lower and breaks all of this market geometry. Until it does, let's not jump the gun. So let's just move the count off here for a moment. Why has that been included in there? Okay, that's fine. Right, so now let's have a look at the monthly time frame. We haven't looked at the monthly chart for a long time. Now that we've cleared the chart of the count, let's take a look at what kind of candle we're forming at the moment. This is a log scale. Let's turn the log scale off. hide this. So at the moment we've got an extremely bearish looking shooting star. Long tail to the upside, very little body. Now there's 2 days left in the month, so we can easily fill out this bar, make a new high, and just make it look like a correction and bullish continuation again. That's definitely possible, but for the moment it's looking a little bearish. If it were to close looking like this, that could be a sign of a more significant reversal at a larger wave degree, but it would only be a sign. We would have to see another bearish bar to follow it up, and at the moment it's just a shooting star while it's a shooting star. Price is already trading higher in the pre-market and therefore eating into some of this bearish wick already. We'll want to see how it closes out the month though. Let's come back to the daily time frame, and now let's throw up a count. Actually, let's have a look at our moving averages first. I just need to thicken these out a little bit by the looks of it. Yeah, I do. I'll just make that small correction now. Okay, so on the daily time frame we are through the 10, we are through the 20, we came up with the wick, the highest price of the intraday traded at the 20 exponential moving average and closed significantly below it. Still above the 60 exponential moving average, which is the orange. They're 10, 20, 60 and 250 respectively, and miles away from the green, which is the 250. So any move down to there would break all of this trend, and that would likely be a good stopping point for a larger wave degree 2, perhaps, depending on the percentage fall we would have had from the high. If we were to break down, a bear market would be expected. Which is, the arbitrary figure of 20%. This is only 12%, so I think likely to break that if we were completing at a larger wave degree. So not particularly relevant at the moment. So let's clear the moving averages out of the way. Let's just bring up our volume now, and let's bring up wave 3 extension count, and let's dig into this and have a closer look for the meantime. The more recent price data. Let's come down to the 4 hour here. So this is the best I can do for the moment, going into what I think could be intermediate 3. Now, if we take out this high, we've had a strong bar here, strong recording in the volume with this breakdown here. A lot of fear on Friday came into the market with this oh god, I can't remember the name of the new variant. Whatever it is, people shitting themselves over it, and market freaking out a bit. Pre-market's already trading beyond the range of Friday's candle anyway. I'm not saying it'll open up here, but we've only got half an hour to go for the open, so we might well gap up to close this, If we don't gap up, we may rush to close this gap anyway. In which case, a lot of the technical damage done to the chart on Friday would already be undone. So the options are, you come down in 3 waves, right? You're going to come up in 3 waves, maybe to a new high, and then you're going to come down in 5 waves as part of that long-term trend, and this could be your wave 4, and then off we go again, continue again. So if we see volume declining, which isn't going to be difficult given this huge high here, but if we do see volume generally declining while we rally higher, then we should be suspicious that this is an A and this is the B and not an impulse. Now also we'd be looking for 3 waves rather than 5, but if we see no strong shift in momentum in our RSI and our MACD, and we see declining volume and we see 3 waves instead of 5, then maybe this would be a B wave high and we're going to put in 5 waves down into a C. So there are other ways of interpreting it. You could argue that this is 3-4, so let's just shift everything over. So you go 3, 4, and 5. So you've gone 1, 2, 3, 4, 5. So maybe we're already done, and we are going to get an impulse out of it. In which case, volume should remain steady, if not climb slightly, to support this. But we would still expect to probably see the divergence between these two highs when it comes, to hold in the RSI and the MACD, because we're still approaching a 5th wave of a 3rd, so momentum should be pulling back, having completed the 3 of the 3 in theory. I think for the moment I prefer that. 3, 4, 5 done. Simple enough though, if we do come up and make a new high and it's not corrective, it's impulsive, then we need to shift everything along again. I don't think the 3 could be much further beyond at the minute degree. I mean, if we look at what we've already done, it's pretty gigantic. 423.6% I put the 3 in, which is just about the most extreme a 3 can get. So we've gone, and the only way I've been able to do this because of this 3-wave swing here, bum bum bum. I'm not counting that as an impulse because it's not an impulse. So I'm saying 1 A B C running flat, 1 2 3 4 5, and that seems to have an okay look. It's not ideal, it's not perfect, but it seems to look okay. Let's just throw a regression channel on it. As you can see, it contains price data 1 2 3 4 5, and now we've fallen out of it, so that does suggest something's completed up here, right? How big a completion is it? Is it this intermediate 3? Well, I would expect the same wave degree to hold. Let's have a look at what a pitchfork can tell us about it, and if we can get any reading with an original pitchfork. Well, the original pitchfork, unless this is the pivot here, but honestly it doesn't change much. So if this was the geometry we're using, you could argue for the 3 back here, 4, and then you could argue for this being the 5th. Okay, of the 5th of the 3, in which case this was an A and this is a B and this should have been a C, right? Into a larger wave degree. So 3 was here, intermediate, this would be 4, and then off we go. Not so sure about that because, like I said, the pre-market is currently trading above this candle. It's a shame that it's Monday and I haven't got any other price data to go on at the moment, because if this had done that and looked like 5, I'd be like, yeah, that's 3, that's 3, that's 5, that's a you know, an expanding flat, and off we go. But we haven't got that luxury at the moment, so you're probably going to know more than me by the end of the day, because I can't see the market trading at the moment. We'll see how it looks by the end of the day, end of the month, and what happens with this move. If we come back up and make new highs, then we have to look at the price structure. Are we coming up in 3? Are we coming up supported by volume? Is momentum shifting around to become positive? Do we take out the previous high? Yada yada yada. Does price look corrective or does it look impulsive? In the meantime, breaking this channel, coming back, testing it, should be on guard at least for potential further move lower, but like I said, market's still looking strong at the moment, and overall I don't see any reason for it to break until it does. So right, on that note, before we wrap things up, let's have for the SPY at least, let's have a look at an alternate count. Now this is the most simple possible count I can throw on as an alternative. And this is supported by the idea of the big bearish monthly bar we're having at the moment, the big shooting star, which isn't confirmed yet because it's not the end of the month. So what if we've had 1 2 3 4 5 into a 1? Okay, and then all of this is just one wave, right? Everything we put the channel around, this is all just a 1. Okay, and then we've got to come down to make a 2. And then we can get our pivot pitchfork here into the 3. So this would have a much more significant correction. 23.6% retracement would be very shallow for a 2, but honestly, so many pullbacks have been so shallow during this bull market, it wouldn't surprise me. 38.2 and beyond would be more normal. The typical targets for a 2 are 50 and 61.8% retracement. So that would be a very significant pullback if we were to be completing a larger wave degree here. So that would be all the way down here, right? Huge correction that would be at that point. It would probably bring us back into the busiest price data, you know, the strongest area of volume. On that note, bear with me. Yeah, it would, essentially. You know, you're looking at all this noise here and these previous highs. This gives us a big area in the volume profile here around the 61.8, around the 50, this big zone here, if we were to collapse. Now there's no point saying this is going to happen and saying it's the end of the world and so on and so forth, because until the established geometry that we've got to support our primary count. Until all of that breaks down, we will hold this as a alternative. We can flesh it out as and when it becomes necessary, but we've got to see a lot of damage done to this hugely powerful bull market. We've got to see a lot of damage done before we can call this. So let's leave it on the point of saying, look for the break of this, look for the break of this, and look for the break of this before considering anything more bearish. Okay, now obviously it's down to what time frame you trade on. We've got some traders who are members who are probably already wanting to be short this, and if you've got 5 down and 3 back on a smaller time frame and you were happy with the entry and you've got a stop in place, you can use the standard trade setup to just keep running this down until you get stopped out. Maybe it will collapse, I don't know. But for me, I'm not really interested in entertaining a bearish position in this until I see something definitive. I've been burnt in the past by getting myself tied up with things that a technical analyst should not get tied up with, which is fundamental arguments. Fundamental arguments should be ignored like they are the fucking plague, in my opinion, because they have not applied at all this whole time. There are just too many bears out there who've got too many good points which are not playing out. So until they do, then we can all celebrate their intelligence and say well done. But in the meantime, until it happens, the market cares about inflows, and that's it. And the mega caps are leading the way. So until that trend breaks, there's no reason to assume it will. Alright then guys, so we'll leave the SPY there for the moment. Let me just get rid of this alternate wave degree, put back up our expected count. Let's make sure we're not being overly aggressive with that 4, because that's still a significant correction even if we are in that now. So another week's price data, and see how that monthly candle closes, and we'll be in a better position to make a call. Alright then, so that's the SPY. Let's move on. Okay, and we'll come over and have a look at oil. Right, so unsurprisingly, oil has been doing what the market has been doing. Essentially, it's just been going up in a perpetual channel and seems to be supported. Now, we do have a very bearish count here, however. We have a completed primary 5. Okay, which suggests that the market is topped big time styly and everything's going to collapse. Now, that might be a contradiction of what I was just saying in the SPY, but it's not. Because as I pointed out quite clearly, if that strong upward trend of the SPY breaks down, if all that market geometry goes to hell, if we accelerate lower, then we can consider a very bearish option. So, we need to see if our interpretation here plays out in oil. If it does, then oil will be leading the way down. However, we have a count which suggests this could easily be moving higher as well, which we'll look at momentarily. So, same gig again. Let's have a look at the weekly, I think that fit in. So on the weekly time frame, we've had a really savage divergence building up, really strong here on the RSI. A high, lower high, lower high. This goes all the way back to March 21 with this high, and then this high. So 3 higher highs in a row, 3 lower highs in a row. Big correction underway. Now, it could be already over and we're about to just take off. If the alternate count we're looking at is correct, then we could be about to literally moon, and then we could easily undo all of this divergence and just go flying. Now, if this divergence is warning us several months in advance of a primary 5 wave top into a cycle 1, then this subsequent correction is going to be big. Yeah, it could be this could be the 1, this could be the 2, this could be 3, 4, 5, into an A, B, C, into a B, 1, 2, 3, 4, 5, lower again in a C. It could be something gigantic. Okay, and it could take it's got to correct all of this if it's happening now, in time and price. So it won't be over in a flash, and it won't be, this will not be over quickly. You will not enjoy this, I think is the phrase. Either way, That would be if we've completed up here. So we've got strong divergence here in the RSI and the MACD. Still a long way above the zero bound on the weekly time frame here, and still not at oversold conditions on the weekly time frame. So there is room to move lower in the short term anyway. Now, very bearish look on the daily time frame here, but we don't have the divergence here on the daily time frame. Okay, not in the MACD. Whether or not we do in the RSI is also up for debate. Let's have a look. I don't think we do, really. I'd say they're equal peaks. So we don't see the strongest divergence here on the RSI, and we don't see any on the daily time frame, and the MACD is only showing up on the weekly time frame. But as a rule, larger time frames trump smaller time frames in terms of their importance. Okay, because that's the way wave degrees work. You know, the bigger the wave degree, the bigger the impulse, the bigger the correction. So we should observe our momentum indicators and give them the same priority as we would our wave degrees. You know, if it's something big happening on a long time frame, then we should consider that it's something big happening on a long time frame, and vice versa if it's something small. So this is nice and simple, really. The count completes in a fifth wave, and we're done in the cycle 1, and we're going to have an almighty correction. That's this interpretation. So let's have a look at some market geometry to see if anything significant is broken down here. That's not the one I'm looking for. Okay, so you've got to be careful how you do this. I'm using Elliott's second method here because taking the 1 with this funky diagonal, right, means that to get to the 3 we'd cut through the intermediate 3, which would be a throw over. So I'd argue that that would actually mean a much more severe break of the channel has occurred already if we were using Elliott's first method. Let me just show you what I mean. We would grab the 3 up here, right, then we would drag down to the 2, and you can see the 4 went through it, and if we extended this like that, then we really have smashed our way through this channel already. Tested it, bounced, and smashed our way through it. So I'm not a big fan of that. What I prefer is to use the second method here because it just lines up nicer. We get the 2 and the 4 and the 3 in contact, and the 3 of the 3 with a slight throw over, which is very normal in the 3 of the 3. So really nice points of contact here, better I think than using the first method, and a slightly shy 5th, which doesn't quite make it to the top of the channel, and then a pretty violent sell-off in the meantime. So yes, we have technically broken the channel, but we are looking bloody bullish as hell in terms of today's price action. We are doing everything possible to get back into this thing. That is a pretty strong bar for the daily, and we're not even in the US market open yet. We'll see what happens. If the price breaks down violently from here through this channel, then this greatly increases the probability of having topped into a 1. If we bounce violently back into the channel, it's either part of a correction before moving higher, or it's an even more bullish scenario. So before we move on to that, let's look at how we can interpret the recent price action here. Now let's check our regression channel as well. So a more significant break of the regression channel here. So we could argue if all the results within 2 standard deviations are occurring within 95%, then this is definitely a 3rd standard deviation or greater result out of all these previous price data. So this is a pretty extreme move. Okay, how are we looking for our moving averages? It's a 250-day test to the tick. Literally to the tick. This is why we layer levels of analysis on top of one another. It's all well and good having a count, it's all well and good having a channel and a pitchfork and that, but sometimes the most basic signals are all the market needs for its participants to make decisions. And look at the 250's resistance here. 250 comes down, and we don't like it. Not until we do. Okay. And we can see here the 60, support here, resistance here, support here. Right, so the 60 is significant. We've got a exact to the tick test of the 250. So how's the volume looking here? Okay, so it's all relative. We have to kind of ignore this in our analysis into this total collapse down to zero. Oh, didn't mean to do that, sorry. Let's try that again. Yeah, so relative to everything that wasn't that gigantic move, we can see that we've had some pretty aggressive increase here in the volume. So this last bullish move was really well supported by volume. Much more so than this move here. So, I mean, it could be something very, very bullish. It could be the crescendo of the buying, right? Before a total reversal in the market. Volume showing some signs of declining during a move down rather than continuing to accelerate. So the thrust down, yes, there is some strong volume here on the Friday. There's absolutely no doubt about that. We were declining, so it's too early to say correction on declining volume. From this peak it looks like it, but we're already into the correction. You see what I'm saying? So let's just get a vertical line for the peak. So we can see here's the peak. So we had volume increasing into the end of this impulse, right? But once the correction began, volume increased more. And then in the initial move down, and now it's starting to decline, suggesting that we're coming to the bottom of whatever this correction is. Well, the bottom for the meantime was the 250-day, and if I remove that again, I'm going to slap myself on the wrist. Okay, so the bottom for the meantime was the 250-day exponential moving average. So, all to play for currently. If it breaks down further from here and gets weaker, that would be an extremely bad sign. This could be just the initial move from the high, right? Test a major support, come back up. Test median line perhaps, or major retracement of this high, and then have the C leg. So A, B, C. So I think either way, if you want to short this, doing it after finding major support here and bouncing is not the time to do it. Looking for something back up, right? Some kind of move back up, then a move back and down, entry, stop, go. That would be the way I'd want to do this. If I was waiting to short, if I wanted to short this, I'd be waiting for a retracement to look to set up the standard trade setup on the short position. In the meantime, looking pretty strong so far today. This could all change. I mean, we've seen oil, we've seen oil look like it's bottoming and then implode. You know, it's happened before. This correction is one of the strongest supported downtrends I've ever seen in volume. It literally just got more and more brutal as time went on. So if this is declining volume perhaps, then maybe this is the worst part of the correction was here, in terms of the initial support down, thrust down, and now maybe we're cooling off into the low. So, having said all of that, let's try and summarise. So it's either A with a B to come and a C to come after that, taking us into that 1, 2. Right, significant wave 2 correction at cycle wave degree. Or it's not that. So let's come in now and have a look at the smaller time frame, 2 hours. See if we can put a count on this sucker. What are we looking at here? Okay, so let's come and have a look purely at the creative. Creative? I'm going to have to be creative. The corrective element here. It's never just a nice clean impulse, is it? Why can't it ever just be a nice clean impulse, Tom? Why does it always have to be ugly? Hey, why does it always have to be ugly? This is freeway. This is a freeway swing. This is a freeway swing. This is a freeway swing. This is strangely looking like 5. So is that A, B, C? A, B, C? A, B, C flat? W? That looks like 5 waves, doesn't it? What's this? There's 1, 2. Why? Why do that? Why not just give us something easier to work with? So A, B, C? A, B, C. Then diagonal maybe? 1, 2. Overlap? Is there an overlap? There? No? Okay. Could live with that. Oh, I don't like that. 1, 2, 3, 4, 5. A, B, C. 3, 4. Jesus. 1, 2, 3, 4, 5. 5. 1, 2, 3, 4, 5. A. Bum bum bum. B. Bum 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 bum. C. Possibly, if we're going to go lower. 1, 2. So, no, I don't like that. Forget all of that. Forget the ABC bit because it doesn't make sense. Because this is free, innit? Son of a bitch. 3 with a 5, 3, 5. That's a zigzag. That's a zigzag. That's a zigzag. Okay, so let's change that and say W. This is a zigzag, not 5. Unless it's here and this is a flat. 5, 3, 5 doesn't look particularly nice. So A, initial zigzag. B, 1, 2, 3, 4. You can't get 5 waves in here. You can't get 5 waves in there. So that can't be ABC. Why? Why are you doing this to me? W. A, B, C. Oh yeah, solid. A, B, C then for the X. Expanding flat. Does that work? 1, 2, 3. 1, 2, 3. 1, 2, 3, 4, 5. Yes, that works. Bloody hell, that's horrid, isn't it? Zigzag, flat, zigzag. Combination. I can't get 5 waves in here. Could you count it as a diagonal? Could you go ABC1, ABC2, ABC3? No, that's not going to work. Alright, so it looks corrective rather than impulsive. Which kind of damages the idea that this is a 5, honestly. Because we can't get an impulse. Unless this is ABC1, ABC2, ABC3. Okay, so maybe that's the alternative. So what I'm going to do is I'm going to label this double combination and throw it into the other folder with the alternate count, because I think it's going to fit our bullish interpretation, which we haven't looked at yet. It's going to fit our bullish interpretation better. Alternate bull. There we go. We're going to turn that off. So we need a solution to this, which accommodates the top. So what did I just say? Oh yes, that was it. 1, 2, 3, A. 1, dun dun dun, 2, bum bum bum, 3, bum bum bum, 4's got to come all the way back here. 5. That looks a bit messy, doesn't it? Does the 4 overlap this? But is that 1, 2, A, B? Yeah, fuck it. No, that's not going to work. Unless it's expanding. Let's just try it, see what we get. Because that looks like 3 waves. So, bear with me guys, doing a bit of live work here. Is there a trend there? No, it just looks like a channel. What about from the 1? Let's measure this. 1 to the 3. 3 is shorter than 1618, that's not a problem. Is it longer than 1? Yes it is, so that's okay. Is the 5 longer than the 3? Yes it is. Alright, so this could be an expanding diagonal with 3 waves. Sorry, that would have to be there. 3 waves, 3 waves, because this is an expanding flat in itself, I've just realised. Because of the 5 waves here, and that is 5 fucking waves all day. I mean, it might not be, but it looks like it, doesn't it? A lot more convincing than the 3 wave pivots we're seeing everywhere else. You know, like this, and this looks like 5, yeah? So we've got to accommodate it one way or the other. So let's just say 1 to here, because that looks like a completed 535. Although I'm assuming 5 waves here again, aren't I? So this just keeps becoming a problem. Oh, Jesus. Is it there? Let's come down to 15 minutes. It's just not there. It's not there. 1, 2, 3, 4, 5. No, you can't do that. I think you're getting away with that. It looks like complete nonsense. Especially with this pivot here. Could it be truncation? 5ths here? Are we just cheating at that point? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Overlap here. It'd have to be a zigzag. And this is it. No, it can't be because that's a lower low. Oh, is it? No, it's not. So, alright, it's a really messed up zigzag. So, no, I can't really touch that. Oh, Jesus. This is a 3 wave pivot all goddamn day, but there doesn't seem to be 5 waves here. A, B, C, W. The X for WXY seems to fit better. Okay, I'm going to have to leave that there for the moment, and let's go and have a look at this bullish count. I can't get an impulsive move from the high. Not cleanly. Not unless this over here is the high. Because we've got 5 waves here. Oh, bloody hell. Hang on. Just dump all this nonsense. And let's just assume that we do get a truncation, but it's not here, it's here. Okay, I don't know how I'm going to get over here. I'm going to have to go away and work on it. Because I had a diagonal here, so that's crap. So we've got to get rid of that. So it could be 3, 4 diagonal in the 5. So maybe it's not crap. 3, 4. 3, 4. 3. Oh, that's 5 waves all day. 3, 4. No, that's 3 waves. Is it? Is it? Is it A, B, 5 waves and a C? 3, 4, running flat. Then the diag. ABC 1. No, that doesn't work. It was ABC 1 to here, wasn't it? ABC 1, ABC 2, ABC 3, ABC 4, ABC 5. I don't think that 5th wave is going to be shorter than that 3rd one. Bloody hell, that's close. Okay, I'm going to have to come back and fiddle around with that later. we'd have to have a truncation here to make this work, which I don't like per se. I may have just jigged everything around now and go back to hating it in a minute. So we got a 1, 2, 3, 4, 5 into here at least. Sorry if this is taking up too much of your time, guys, but it at least explains this WXY, doesn't it? Like, this is free, right? So there, 1, 2, 3, 4, 5. We can get that 5, 3, 5. We just can't get 5 on its own. W, X, and then the fuck is this? Right. Okay, that'll do. So there we go. We've got a possibility of a truncated fifth. So then that does kind of become really bearish, potentially, doesn't it? Because now we can get ourselves down to here. So I'm going to save that there for the moment. We'll have to wait and see what the price action does. I'm going to put all this into what I've called the bull count, because let's face it, even if we correct 50%, it's a wave 2, which means a 3 is coming, which is uber bullish long term, isn't it? So let's now have a look at this alternate idea that we were just fiddling around with. So ABCW, ABCA, AW, hang on, W, ABCX, what is this? Get rid of that, it's confusing. W, X, Y, done. Okay, so let's show you what this is on the long time frame. It's only a teeny tiny rudimentary idea at the moment, and it was shared by one of the guys on the Discord, Lone Wolf, I think it was his username is. And it's the idea of an extension in the wave 5. Not something I was subscribing to really at all, but it is a possibility, because at least we've got a nice clean cut off. We can say it's bullshit if it goes wrong. So this is the idea. If I can just, I'm going to have to bring up the bullish count for a moment. Okay, so everything's the same to here, 3, 4, and then the 5 goes all the way over here, or higher. Okay, way higher probably, and then this is a 1, 2, and then we're going to rip higher into a 3, right, of the 5, which would be like blow off everything if oil's going stupidly high within the coming years anyway, because this is either a 1 into a 2 into a 3 of hundreds of dollars a barrel, right, or it's just going to do it sooner than we expect. Sooner than we expect would be a hell of a shock, I think, wouldn't it? A hell of a shock, very unexpected, considering the potential shock to supply. Oh, I don't even know how to interpret it at the moment. I'm not going to bother trying regarding fundamental arguments. So where are we here? Dun dun dun. Yeah, so now that we've expressed that, let's move this out of the way. So 1, 2. Now the one thing on the side of this is we get a completed WXY correction. It's a little funky, and maybe that diagonal is a possibility. I just can't see it. Maybe the truncation makes more sense, and this is a 1 and this is 2. Either way, we can dismiss this if we take out the low here. Oh, sorry. Take out this low. This counts nonsense. So there's something to look for at least. Let's throw that in the same folder. Okay, so let's wrap things up with the with oil here. Looking for the same thing we're looking for in the market. We've come back to support, we've come back to the channel. In the case of oil, we've broken it. Right? If we bounce, are we bouncing correctively before heading lower? Are we bouncing impulsively? We won't know this until we see another week's or so price data. Okay, if we continue, if we get only a small bounce and then we continue lower, that's bad news. Just bad news all round, because I think at that point we'd have to consider this pivot with our truncation over here, right? We'd have to consider this 1, and whatever we get here is a 2, and then we're coming down in 3, and then we're coming down in 4, 5, A, big correction in a B, down in a C later. Okay, way out into next year. So If you are into fundamental arguments, you'll know what that means. That means everything gets locked down again, everything goes to hell again, and everything stops moving, and the oil goes just flying lower. If everything continues to function and work, and all the inflationary pressures start to take hold instead, off we go. So that's how I see oil. Keep your eye on the price action, keep your eye on the trends, keep your eye on the geometry I've laid out, see what kind of retracement we get, see how deep it is, see how the price structure looks. Alright, let's now move on to our last thing, which is the IWM. So let's come over and have a look at this. What a bitch this has turned out to be, hasn't it? We spent all this time in here just to fake out and come back into it. You know, that is just the markets can be cruel things. They really can. At times they can be really cruel. But that's why we don't take trades without a stop. That's why we don't take trades without a margin of safety. That's why we don't take trades where we don't have a clear setup, because the market's just too mean sometimes. So this is obviously complete bullshit now. Right, so our options here are to extend the correction as incomplete or call a top. That's it. So it's either the same shit we were just looking at in oil, which is this is now 1, this is now 2, and off we go into the wild blue yonder. How this is a 1? I don't know. 1. I can't get a completed impulse up here, I don't think. I can't get a completed diagonal up here, I don't think. So that's less likely, I think. Or the correction isn't over, just wanted to take some of your money. Get the retail traders to provide some liquidity breaking this range, just so we can flush back into it, wipe out the leverage, and load up. You know, so a corrective interpretation then would have to just drag this out further. So this is now, I think, an expansive B. How we get into it would probably be a WXY, I think. I don't like this initial swing low, right, being lower than everything afterwards, because we can't just get a clear, you know, could we say A, B, 1, 2, 3, 4, 5. Oh, I have a messed up zigzag with a truncation. A, B, C. 1, 2, 3. 1, 2, 3. W. 1, 2, 3. W. X. Dun dun dun. And then bum bum. Y. Oh no, I've got XZ here. So sorry, bear with me. W. X, Y, something like that, I don't know. 5 waves down. 1, 2, 3, 4, 5. C, done. Then we go up. And it was a fake out. Alright, so that's... I'm going to have to go and come back and work on the chart here to try and pick this apart, but it really is a mess. Real mess. So we're either still in it, so... Let's just put that in the ball folder for the moment. I'll say wave 4 correction is still underway. That can. Okay. The alternative is that we've topped, but I can't get a completion. I can't get it to complete. Yeah, there's just not 5 waves here, guys. There's just not 5 waves here. That's not a zigzag. Is that a zigzag? maybe, alright, maybe it's not complete. So maybe it's 1. 2, 3. There's no free wave move here. 4, 5, and it's an expanding ending diagonal like that. Can't prove any of that crap until it does something. So, you know, it's just ugly as hell. That's not the kind of count you can call at the end of the day, because there's just too much overlapping noise, and there's no clear impulse here. Not even here. Right, we've got this overlapping going on here, and then a nice thrust up here with. It doesn't subdivide as a extension, because we'd expect to see 1 2 1 2 1 2. That would seem to be working, and then we've had this come back into all of this. It would have been easy to say 1 2 3 4 5, retest all of this resistance for support, but that isn't what happened. So yeah, we are a little bit stuck at the moment. I would argue that all of this is still corrective and it's just fucking around with us. This is a fake out. You know, if we suddenly rip higher, then maybe that funky ass diag is the one we're looking at. Right, if we suddenly turn around from here and come back up, then maybe that's a really weird looking diagonal. In which case, it's either the end of something or the start of something, and it was diagonal can only begin. It can only be in a wave 1 and can only be in a wave 5. So if it is that weird ass diagonal, which I think what we'll do then is we'll just throw some stuff on the chart. This upward trend line seems to be getting respected. I'll say that much. That's one typical sign of a diagonal. Okay, so maybe it's a broadening, expanding diagonal. I don't like it in the slightest, but maybe that's what we're dealing with. So because of the way these things get bigger and expand, and they're all zigzags, right, then it's very difficult to call where everything is. So if you go, first 3 wave move is a 1. 3 wave move in here is a 2. And then this is a 3. This was an A B. Oh, that's weird. That's an ABC somehow into a 4. ABC into a 5. Okay, so maybe, or it could be that this is lower down, and it's going to be ABC 4. As long as it's not below the 2, it could still be even bigger. Like this. But I really am clutching at straws here. So let's just leave that in place, and for the moment we'll say 1 2. This could be A, B, C, and this could be a diagonal within the A of the ABC. See what I mean about how difficult it is? So the 3 could be up here, and this could be A, B, C into a 3. But we'll just leave it here for the moment. 4, 5. That's the best I can do with that. Okay, so I think the way we've got to interpret this so far is it's still corrective. I'm not saying we have to, I'm saying it's probably more likely. If this is an expanding pattern though, it's going to be a real bitch. Because what's going to happen is an established range that everybody thinks is safe was tested for support and found none. So if we do come down lower, the same assumption will be made with these lows, but it won't hold, it will break. The panic then could be pretty extreme. You know? I'd love to say 3, 4, 5, right, and we've topped, and now we're impulsing down. Maybe it's possible, and I can't see it. If you can see it, feel free to share, But I can't get 5 waves into a 5 up here. Just can't do it. It's not here. If it is here, I can't see it. So I can't really call the top here because it just doesn't look like it. So it's either a continuation of this correction, and we're now going to get 5 waves down in the C. Could be running flat, doesn't have to come beyond the A here. If it did, I think it would cause panic. It could stop before the lows. That would finally be the 4, and then finally off we go. Alright. Okay guys, I've been talking for way too long. Going on and on and on and on. But this is what I wanted to do. It will be time stamped. You can watch each of these assets one after the other. You can watch the whole thing together. It's going to be a long video either way. Thank you very much for joining me. So if you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, big thank you to my patrons. Your support is greatly appreciated, especially recently with the things I've been going through that I've told you about. If you're interested in joining the Patreon, then please leave it until late on the 1st of December, or maybe even do it on the 2nd of December to avoid any time zone issues. And I always encourage people not to sign up this late in the month, because you will get charged again at the start of next month and the day you sign up, so you will get double charged close together. So that's it guys, thank you for joining me, take care, and I will be back with you likely on the Wednesday. Alright, all the best, bye bye.